Yeah, late night drives in the same.
That's another thing too, Sack Lunch, and anybody else who's been listening to my last like hour of rants, is being aware of your trading style too, your trading strategies. You know how, and again, if you have access to the premium member or the lifetime membership in chat or the YouTube membership, check out that 90-minute one-on-one I did. This covers everything. But how aware of your trading strategy are you? Do you understand? Like here, I'll show mine for example. Here's an important level. Let's say this is a level I'm looking over, I'm looking under. I'm trying to look past for a breakout. I'm looking past for a trade, right? We have 4 styles of trades in my chat. We have the 40% entry, which is for open range breakouts, and this is when price is, whoops. Yeah, whoops, big time. Zoom that back out. And this is when price is either rising or falling. It doesn't matter. You know, any of these trades can be taken in either direction. So let me just go through them. But this is when you have an open range breakout over the level, and you have rising volume as it closes over that level, and this is where you like to take your open range breakouts. And this is what we call a 40% entry. This is 40% out of 100% confidence. Now, it's under 50% because all you have confirmation is that it broke the level. You have no confirmation of retest or of control of that level, so it's very, very low confidence, but it's enough to at least show off a light on your screen or say, hey, something's happening. Now,
really quick, SPX hitting 44 or 40 psychological number, as well as right below current day's open, so
oh yeah, good call out.
Could expect some slowdown here.
Could be a second lower high of today too.
Good yes, call sir. Out.
So we have the 40% entry. No, you're good. And then we have the 80% entry. This is double the amount of confidence because we do have idea of who has control. And this is when price comes down with lowering volume and holds over the breakout level. Now, a lot of the times, guys, this can be your breakout level. A lot of the times it can be when we draw a fib and we say, hey, as long as it holds the halfway point or the golden pocket, we're looking for good for a continuation higher. As soon as we get a breakdown, then we understand that bulls do not have control of that. They're not in complete control. Bears do have the possibility of retesting this underneath and trying to leg this down further, right? That isn't always the case. So that's why we like to talk about 40% and 80% entries. These are the 2 main styles of trades you're going to see over most communities, regardless of what they call them. Retest, orbs, you know, all these names. They're all just labels is all they are. But 40% and 80% is a good consistent way of looking at these, okay? What other styles of entries do we have? Does anybody in stream know the other 2 styles of entries that we have that can also be taken advantage, both for the upside or downside? Who knows the other 2? We got the 40% entry, the orb. We got the 80% entry, the retest. What are the other 2? Exactly. Good answers, everybody. Y'all are instantly coming through with the last 2, the BTD and the lead test. That's exactly what I wanted to see from you guys. So this is another big thing, is just being able to be focused and being aware of how your trading style works, how your trading strategies work. So you understand how 40% entries work. You understand that if it breaks above a level, the risk is right here. The risk is all right here because you don't know that it wants to keep holding that level. So essentially, if it breaks that level, you should get out of that trade, right? So we understand how the entry works. We understand how the stop works. And as soon as this reaches a good psychological area, whether it's like a whole number, like let's say 442 or 440 or 445, whatever, or we have a bigger time frame level or an intraday level that we might have drawn from recently, whatever that may be, needs to be your first target. Take your profits there, get out. Staircase method that style until you have grown with that. Same thing goes for the 80% entry. Let's say we see a good push over, we see a good retest, we see a small move up, and we're in on this trade. We want to get in because we like the 80% confidence, right? Where does our stop need to be? Just under the level in which we have control of, right? And where does our target need to be? Now, there's a couple different ways of thinking about this. The passive way of thinking about this is aiming for that recent high in which we just stopped at. You could also aim for the halfway point of this move in which it fell to where it dropped. An easy way of doing this, again, is the lead test, where you can grab this, throw it down here, and if you end up taking that retest trade because you like the bullish control, even if this isn't going to be a lead test, even if it is, regardless, this is a good consistent target to aim for every single time. So if you want really, really small, consistent passive gains, you're going to be aiming for that 50%, and for that high of day, that recent barrier end of that move, right? The outer perimeter of the move, where it pushed to and stopped, right? Where it pushed down to, slowed down, and where it has a ceiling above its head. That's going to be your further out target. This is going to be your super, super passive target. Anything outside of that can be seen as a runner target, whether you have a bigger time frame level there, whether you have, you know, whatever EMA, whatever you have out there, that needs to be your farther target. All right, so let's talk about the So we talked about the 40% entry. We talked about how the targets work, how the stop losses work. We talked about the 80% entry, how the targets work, how the stop losses work, right? Let's talk about the Lee test now, and then we'll jump into the BTD, which is the opposite of the Lee test, right? So let's jump into this. A lot of your guys' favorite. So what happens when we get a good move to the upside, a good breakdown, and we end up getting this 80% entry move? What happens to those moves that don't continue to make it up higher? What happens to the ones that do end up stopping at the halfway point, that don't quite make it past that next spot? Where do they end up going? Let's say they stop here. They don't end up getting that next move. Bulls are not in control. They end up making that lower high. What comes from here? The Lee test. So where can we put our stop loss? Right at that golden pocket, right above the golden pocket, very, very close to where it made that hill and where we were looking for extra weakness to retake this down. Again, not the first time, but the second time to give us more bearish control. And just like we take profits from the buy the dip entry here, the 80% entry here, where we go back up to the halfway point, the same thing can be applied here. You could take it halfway, you could take it down to this level here, and any outside targets outside of that need to be for runners. That's your Lee test, though. A lot of the time, too, let's say this first move isn't the one that takes it. A lot of the time, a lot of us like to wait for that lower high, again, the second lower high, to pop up, and you can wait, which is super passive. It doesn't always pop up, and you can see there are multiple variations to this. Again, they're not always going to stop at the golden pocket. They're not always going to stop at the control point. They have two different levels they can stop at, and it's really a range of an area that you need to look at, not just one particular spot, so keep that in mind. So now that we've talked about 3 entries, how their stop losses work, how their targets work, let's talk about the buy the dip entry, another big favorite from the BB community. So what happens to the stocks that end up dipping? We end up taking large dips, and then they end up getting a spike play, you know, whatever, buyer reaction steps in. What can we take advantage of this? And I'm sure a lot of you know how this works. We end up getting the dip. We end up getting that first initial move to the upside, regardless of however far it moves again. And not every time is it going to be the same. Not every time is it going to be pretty. We end up getting the dip, we end up getting the first buyer move, and then what do we look for? We want to look for a lower high or a double bottom. Again, whether it's a perfect double bottom or a lower high does not necessarily matter. We are looking for one of those two to show that a new low has not been made. That's the thing we're looking for, because as long as a new low is not made, we understand consolidation can be had, right? That makes sense to everybody? So that's what we're looking for. And as long as this low is made, this is what we call consolidation. This is what we call base building. This is what you want to see for buyers to potentially move out of there. Now, a lot of the times this happens after you get your one low, you get your first buyer move. You never trust that first buyer move. A lot of the time you want to wait, set your stop loss just under this or at this low after this dip here, and then get it on your play. And then as it pushes through this, that needs to be your first target. And a lot of the time, this likes to go back to that opening price historically, but not every time. So a lot of the time, you need to aim for the halfway point of the drop that happened from here to here. Again, happened from here, fell to here. You need to be aiming for here. Wow, I drew that perfectly on accident. But that's where you need to be aiming. Again, this being your further out target. But that is the base build by the dip strategy. We talked about stop loss, talked about target, how it works for passive and for runners. We talked about all 4 styles of strategy. Now, if I was to ask you, could you tell me how you trade? Could you tell me the same thing with all of your styles of strategy? That is all 4 types of entry for our community. Open range breakout, retest, buy the dip, and Lee test.